Hi, my name is Tom Blake, and I am a certified residential specialist with RE/MAX Liberty in Westminster, Massachusetts. And I am here with...
My name is Brieanna Kelley. I am with AnnieMac Mortgage, the branch manager in our Leominster location.
And we are here we decided we wanted to do a video today about the MassHousing Down Payment Assistance Program, which I'm not the expert, that would be Brie, who is the expert. And I'm going to ask some questions and hopefully get some really great answers for anybody who's interested in getting some down payment assistance. This is what you really need to understand and what you really need to do in order to get yourself a little help. So I am going to ask some prompting questions and you're just going to answer them, I guess, right?
Sounds great.
So, good. So let's see. Why don't you actually explain to us what the MassHousing Down Payment Program, is?
MassHousing Down Payment Program is a program through MassHousing, which is a conventional and FHA loan product that allows you to be able to use up to $30,000 of down payment assistance, depending on which program you fit into. So there's multiple. They have multiple programs that they offer, and some of it's income based, some of it is area based, but almost all of it's based upon county.
Okay, so that is a really let's start with who's eligible for it.
Okay.
What are the eligibility requirements for the down payment assistance program?
Okay, so for the down payment assistance, most of them you have to be a first-time home buyer. There's a couple of towns that will allow you to utilize the down payment assistance even if you are not a first-time home buyer. So those programs are in...
What are they?
So Fitchburg, Leominster, Worcester, in this locale pretty much. They're called gateway cities. So again, you have to be able to qualify for them within the income programs. There are some other little caveats that are attached to it, but you definitely want to have a conversation with a mass housing specialist, and that's really important. You want to have conversations with someone that really understands these programs inside and out.
Like you.
On their top originator list, been for quite a few years. Yep.
Oh, you're on the top originator list, really?
Yeah, for mass housing. Yeah.
Oh, no kidding. Okay, well I guess you are truly the expert, right? So I'd like to talk a little bit about the specifics of the assistance. Mm-hmm. I understand, somewhat, obviously. Yep. And I understand that there's two different types of down payment assistance. One is a deferred payment loan and one is an amortized loan. Can you explain, and they have some different requirements and they have some different limits. Yes. Could you explain how each of them works?
Absolutely. So the first program is a $30,000 0% deferred loan, which means there's no payments required while you have the loan. That particular loan program is called Workforce Advantage.
Okay, wait, sorry, I'm going to interrupt you
That's
there for a second. So you don't have to pay it back?
You do have to pay it back.
How do you pay it back?
So if you were to refinance, sell the property, or once the house has been paid off, the first mortgage has been paid, but that loan does not come due unless you refinance or sell the property.
Oh, no kidding. Okay, so we're gonna dumb this down for me, if it's all right. So if you qualify for this $30,000 down payment assistance, they will give you $30,000 as a down payment, which you don't have to pay back until you sell the property or refinance the property.
Correct.
So it's kind of just like hangs out there in limbo until they recoup the money through either the sale or the refinancing.
Correct.
Am I doing that right?
Correct.
Okay, good.
So that's typically called a soft second. You'll hear that as a
soft second.
Yeah, there's the other type of terminology that they use. That meaning there's a second lien on the property that you are responsible to eventually pay back. So that's something that's really important.
That sounds awesome, actually, quite frankly.
The programs are household income specific, so there is some, income-wise as your entire household, you need to qualify for these particular programs, and that's something that us as mass housing lenders have access to that information. It's also county-based, but it's even drilled down to towns within the county sometimes. So it's very important that you provide all of the information. It's verified by tax returns and things like that. So they do look at the full household.
So they're looking to help maybe lower income families get into houses. So this isn't available to everybody.
Correct.
This is available to folks who really need the help to try to
Absolutely. And
Yeah.
and not having, having $30,000 less on a mortgage is
That's substantial.
Right. So that will
That's a
definitely
lot.
become more affordable. There's more affordability attached to that, which is important.
Just for fun. If we were going to, okay, sorry.
Yep.
go.
No, I was gonna say, and the other part of that same program,
Okay.
there's no mortgage insurance, no PMI, private mortgage insurance. So
Really? Okay. So even if the $30,000 isn't 20%?
So right, so the 30,000 is the second mortgage. On the first mortgage, there's no PMI, which also helps with affordability.
Fascinating.
But
Okay.
that's only Workforce Advantage. So that's one program.
Wow. So, okay. Wow, that is a huge
It is.
opportunity for
It
somebody
is.
if you qualify, right? If you
Right.
qualify. And again, you need to reach out to a Brie or someone like Brie to understand what the limits of your income are in order to
Correct.
qualify for something like that. And it sounds like if you live in Fitchburg, Leominster, or what was the other one, Worcester, you might want to look into that.
Yeah.
I was going to ask something else, but I just lost it, so I guess it couldn't have been that important. So that is the deferred payment loan, hence
Correct.
deferred, right? There we
Correct.
go, right? So with amortizing loan, let's guess that you pay that back concurrently.
Correct.
And that's up to how much?
It's up to 25,000.
Okay, tell me more about that one.
So that's 2% for 15 years, which is about a payment of $160 a month.
Okay.
In both of the programs, you are actually, as long as you qualify, are allowed to use some of the down payment assistance monies to be able to help pay with some of your closing costs as well.
Oh, wow. Okay.
Yep.
Okay.
So there's
it can pay-
another
that's
bonus.
Wow, that's a big deal also, because
Yes.
another thing that people have trouble, so it's not just about coming up with a down payment when you're buying a house. So you're buying a $300,000 house, even if you were bringing only 5% down, that's $15,000, and you need to pay for closing costs, which can be anywhere from like $8,000 to $12,000,
Correct.
right? So really, you're putting down 15 at 5%, and really you have to save $30,000 in order to get into that $300,000 house.
Exactly.
And I'm being real conservative with that number. Anyway,
So with that,
that's pretty flexible.
yeah. So that program, the income limits are much higher than people would think. Like in Worcester County, in Worcester County, depending on if you're in Fitchburg or Leominster with the higher debt to income.
Yep.
The higher income limits. So you do have some flexibility within that as well.
Okay.
So again, first time home buyer in those counties, having those conversations, making
Okay.
sure you figure out which you qualify for, because the normal programs, like 100, I believe that Worcester County is about 127,000 for the first time home buyer outside of Fitchburg and Leominster.
Okay.
So Worcester County. So if you make 127,000, you would qualify.
127,000 or less,
Or
right?
less.
And that's your household income. Let's be really clear about what that is. So that is.
Actually, no.
Oh no.
It's
Okay.
by who's on
okay.
the loan. It's by on the
Oh.
loan. So that program is
Oh, that's
different.
interesting. So this is the amortized loan.
Correct.
Right? The amortized loan. Oh, okay. So that's actually.
But that opens up the buying pool, right, too, sometimes. So
Sure.
if you're in a situation where you have two parties making good money and you
Yep.
still would like to take advantage
Yep.
of that, that's great.
Okay.
There are also some little things to think about depending on where you're purchasing. There are max loan purchase prices attached to that, and it varies by county, things like that.
Oh, that would make sense because okay, that would. That,
Right,
that
you can't go
seems
buy
fair.
$1 million house, for example, utilizing, which income probably wouldn't work for that anyways, but yeah.
I'm sure this is. I mean, the idea of the Mass Housing Assistance Program is to help people who are having some challenges get into a house.
Correct.
Not a subsidy to be abused.
Yes.
It's designed to be helpful. All right, let's see if I've got any other good questions. So, beyond down payment assistance, what are, and we're kind of bridging into that. What are
Right.
some other great? What are other benefits to mass housing loans?
Okay. So with mass housing, there's a couple of things. First of all, if you hear in the market, Fannie, Freddie, charge what's called loan level price adjustment. They can call it anything they want. They're points. It's an extra cost in the loan. They can frame it in any way they want. Let's not mince
Loan
words,
level
right?
price adjustments. Okay, boy, that does sound like it's a cost, whatever it is, right? Okay. Loan level
So
price
it goes
adjustments.
by your credit score,
Okay.
your loan type, your property type. There's a whole litany of things that they utilize, and it's like this chart and whatever. So
I think I should learn about that.
Mass Housing does not charge loan level price adjustments in their pricing, which
Okay.
means their rates are their rates, and that is it. So that's
Okay.
huge. So if you have a credit score that maybe is like, 690 and you're trying to do 3% down, in the real world, you get dinged pretty hard for that credit score. And a 690 isn't a horrible credit score by any means,
No.
But in their world, the risk is that it's going to be, you're more likely to default in their loan based on their statistics. So we're going to go with that. But Mass Housing says,
Okay.
that's fine. You either qualify for this loan or you don't. So they don't utilize that. Now, the other piece of that is they have discounted private mortgage insurance if you were to utilize their first-time homebuyer program, which is that income up to $127,000.
Okay.
Or if you qualify in one of their other programs that allows you to go up to 80% of area median income, and those are when you fall out of some of the other brackets for some of the other programs, which means that a couple of their programs you do not need to be a first-time homebuyer, just to let you know. So, but in that they have the discounted PMI, which means, again, more savings. Now, also with the private mortgage insurance, they offer, it's almost like job loss security.
Yep.
So there's a little quirky. So if you have two people on the loan, one person makes 70% of the income and the other person makes 30% of the income. The person with the 70% income, part of the income, loses their job. They will make up to 70% of the mortgage payment for 6 months while that person is
Really?
not employed.
Is that applicable to all mass housing loans?
Yes. If you have PMI on it.
Right. Yeah. No, that's really interesting. So, so what's the so you said that they give you potentially subsidized insurance, right? And when you buy a house, and we're going to keep it real simple with my comment. You're going to pay principal, you're going to pay interest, you're going to pay for insurance, and you're going to pay your taxes. And principal, PMI, please explain PMI for me.
Absolutely. So that's private mortgage insurance, and what that is an insurance that you pay for as the consumer if you do not have 20% down on the property.
Okay.
And it's to protect the lending institution that if you were to default on the property, that they're not going to take a significant loss being able to sell that property.
It protects the bank.
It does protect the bank. But it's also, it's nice that it has at least some benefit to you. Other mortgage insurance, private mortgage insurance does not have that.
So this isn't homeowners insurance. Let's be clear about this.
Correct.
It's discounted PMI. So just so that we understand what kind of insurance we're talking about here. Okay.
Yep.
Which is more of a liability thing, the homeowners insurance.
Exactly.
Okay, all right. Again, well, not so bad at this, right? I guess I'm learning. So okay. So what would be? I'm a first-time home buyer, or I'm a home buyer who potentially qualifies for down payment assistance. What should I do? Like, what's the first thing that I should do? So do I just come talk to you? Is there a way to what should I do to get prepared to come talk to you? I mean, if you can give advice on what you are looking for in the ideal person who qualifies for this loan product, what is that?
So I think it's very important to have the conversation, but me personally, what some of the things they'll teach you, like if you ever take a first-time home buyer class.
Okay.
Obtain a copy of your credit report. You can pull it yourself without paying for it, without having it hit your credit report. Unfortunately,
Experian,
Equifax and TransUnion. It's actual annualcreditreport.com, which is the one that's actually regulated. Yeah. So do not. They'll try to have you click through and try to charge, pay for your credit score. Don't do that, please. It's not your accurate credit score, unfortunately.
Really? There's clickbait inside of that?
There is.
No kidding.
Yes.
Okay.
You do not need a copy of your credit score to at least make sure that the information on your credit report is up to date. And it's something that you should be doing on a regular basis, either way. And I know a lot of our credit card companies and our banks and our credit unions allow for us to be able to get that information now. Yeah. I think it's very important that you get that information. So that's one of the things that I recommend that you go ahead and take a look at. The other thing is to prepare for paperwork, you need to show a 2-year job history. Unless you were in college before or in school, there's some side to that. But I would recommend that you make sure you have all of your proper documentation. Taxes, insurance, W-2, I'm sorry, not insurance, taxes, pay stubs, things like that. So you want to make sure you have all that information readily accessible.
Okay.
I usually direct people to go to the website and have them put in an application. I start everything with a soft pull to start anyways, because it doesn't hit your credit report. We can access all of the numbers. We can have a real live conversation about what is your payment going to look like? What kind of down payment do you qualify for? If for some reason you do not qualify for down payment assistance, what other programs can we look at? So I think it's, yeah, it's very important because it's able to provide me with the information to provide you with the, the consumer with the appropriate information.
So Brie would pull a soft credit report to give you a real working idea of what you would really qualify for without hurting your credit report.
Correct.
That's actually a good way to protect your potential client. That's a good way of
And I
working
also
at it.
think it's really important because it gives you a good baseline if maybe you don't qualify right now, but we can work towards future goals to be able to get you into that next position.
That's what we do. That's absolutely,
So important.
Our job is to help you get to the place where you want to be.
Absolutely.
Through coaching.
Yep.
I imagine you spend a lot of time coaching clients and helping them understand what it is that they need to know to get to the place that they want to be. Everybody wants to be in a certain place, but might not understand exactly what they need to do to get there.
Yep.
That's where you come in.
It's very important.
Yeah.
And listen, in this market, you want to make sure that you're making smart financial decisions, and you want to make sure that you're provided all of the information that's available to you to be able to make that decision.
Yeah.
So, yeah.
In a future video, maybe we'll go into how I could help with that, but I really want to focus on you in this particular video. So, so I am going to say that this has probably been a really good interview. Is there something else that you would like to, that you've thought of? There was something that it's kind of off topic. I'm aware of a program, you had talked about checking your credit report. I'm aware of a program now that's offered through, if you go to Mass Land Records, you can actually have it's like a title protection on your, if you're aware of this, but it will protect surprises or people like scamming you and getting your title. I think I'm going to delete this from the video, quite frankly. We're going to find out. Because I'm just kind of falling all over myself right now. I don't think this is really the place where I want to be with this. So moving right along. There, if you go to Mass Land Records, there is a way to protect your title, and it is a free service. That was said much better than what I just said. So moving on. Is there anything else that you'd like to add to our video?
I think just making sure you're educating yourself, working with an experienced local lender is very important, especially in this market. And ask the questions. If you have questions, ask, because I'm telling you right now, the amount of information that you're going to be given to up front, there's no way that you're going to remember everything, and then we're going to keep continuing that education throughout the process. And please don't ever feel like any question is stupid, and if someone's being hesitant to answer a question, something's not right. So
agreed. Yeah, I think that's pretty good.
Absolutely.
What do you say?
That's great.
All right, well, my name's Tom Blake. I am a certified residential specialist with RE/MAX Liberty. You can reach me at 508-951-2803 or at tom@homesjustforyou.com. And you can reach Brie.
I am Brieanna Kelley. I'm at the Leominster location, branch manager of AnnieMac Mortgage. You can reach me at 978-852-6376 or B Kelley, Kelley, at AnnieMac, and it's annie-mac.com.
All right, great. Thank you so much, and we hope you enjoyed this video. Take care.
Thank you.